If you're watching this video, I believe that it's safe to say that you live and work in Canada. And as we all know, around this time of the year, we're all trying to figure out how to file personal income tax. While this can be a bit tricky with all the things that need to be figured out, once you understand how tax brackets and marginal tax rates work, that should make filing personal taxes a little bit easier. Emphasis on the little. Now, let's get into it. If you've ever tried doing your taxes, you should know how much tax you pay is kind of dependent on two things: where you live and your tax bracket. The thing about where you live comes into play because you do not only pay federal tax, but also provincial tax. But that's pretty straightforward. What doesn't seem straightforward is the tax bracket thing. To start with, your income determines your tax bracket, but there's a bit of a nuance here. First off, the income we're referring to here is not your exact income, but your taxable income. Your taxable income is the part of your income that is, well, taxable. After taking into account tax deductions and exemptions that you qualify for, and also what has already been taxed. Secondly, Canada operates a marginal tax rate system. And if you don't understand this properly, you might end up thinking you have to pay way more than you should. But the only way to explain this is with simple examples. So the federal tax bracket rate for last year was 15% on earnings of $50,197 or less, 20.5% on more than $50,197 up to $100,392 and so on. However, this does not mean that people who earn, say, $51,000 have to pay 20.5% of their income in tax. If they have to, they will be taking home less money than the person who earns $50,000 that paid 15%, if that makes any sense. What actually happens is that taxation and tax brackets in Canada is progressive. Basically, if you have a $90,000 income, that income falls under two tax brackets. And in those two brackets, the taxable income is different. The first tax bracket is on $50,197. The tax rate of that would be 15%, and the taxable income would be $50,197. The second tax bracket is on the next $50,195. So the tax rate on the next $50,195 is going to be 20.5%, and the taxable income is from $50,197 up to $100,392. So if you earn more than $50,197, you would pay 15% on $50,197 and then pay 20.5% on the addition up to $100,392. That is, if you earn, say, $90,000, you would pay 15% of the first $50,197 and then pay 20.5% of the remaining $39,803. This way, you do pay more in taxes when you earn more, but you also have more to take home as your salary. Tax brackets are also applicable with provincial taxes, but each province has its own tax bracket. What that means is, when you add the federal tax to the provincial tax, which is actually how things work, the person who earns $50,197 would pay more than 15% of their income in taxes. Now, there is something that we need to go back to, and that is, what exactly is your taxable income? I mentioned earlier that this is the part of your income that is taxable, taking into account all deductions, exemptions, and your tax brackets. But there's more. There are different kinds of income, and they're not all taxed the same way. For instance, if you're calculating your income, you really only add half of any capital gains you get, which also means that your expected tax rate would be significantly less. What's more, both qualified and ineligible dividends have a corresponding dividend tax credit that lowers the taxpayer's tax liability. So yes, that's the basic idea of how tax brackets and marginal tax rates work in Canada, but it is important to note that it's not your job to figure out what your tax rate is. The federal government or your provincial government publishes that. What you need to figure out is what tax bracket you fall under and how much of your income is taxable. You could decide to just do things pretty straightforward as has already been explained, but if you're looking to reduce the amount of tax you owe, you have to pay attention to the things like capital gains, eligible and non-eligible dividends, and how much you are to pay on those. You also want to find out what tax deductions or exemptions you're entitled to. There is something called income splitting that could help you pay less taxes as well. Basically, income splitting is about shifting the tax burden away from the top earner in the family and moving some of that burden onto the lower earners in the family. And if all of that starts getting way too complicated, you might just need to employ the services of a tax professional. And that's the basic idea of tax brackets and marginal tax rates. Bear in mind that this video was not professional tax advice, and you should always consult a professional before filing your taxes. Also, don't forget to give this video a thumbs up and subscribe to the channel if you haven't. Till next time, I'm Peter, and I'll see you in my next video.